Today we will discuss about a very important topic, that is bad debt. So let's have an in-depth analysis what is bad debt. So when sales are made in the business, the sales can take place in two ways. All of us, we are very much similar about these things. One is cash sale, another is credit sale. When the cash sales are made, that means the cash is being received immediately. And when credit sales are made, so it blocks the receipt of the cash for a short time period. That means what? When the credit sales are made, the firm is supposed to receive money from those credit customers in a future course of time, say within one financial year. So from the credit sales, the Sunday debtors arises. So what are the Sunday debtors? Sunday debtors represents all those credit customers of the business, but all those customers to whom the firm is selling goods in terms of the credit. But sometimes it happens that all the credit customers fail to pay the money. Not all, a part of the credit customers usually fail to pay the money. Whatever is the reason behind that, it is something different. So, business firm is about to recover or receive money from the Sunday debtors within a financial year. If the firm is failed to receive or recover the amount from the Sunday debtors, that represents bad debt. Bad debt means what? It represents completely irrecoverable amount from the credit customers of the business. I am taking one example. A firm is making a credit sales of rupees 10,000. So automatically the Sunday debtors amount will be 10,000. So at the year end, the firm recover only 7,000 amount out of this 10,000. That means what? The 3,000 amount the firm failed to recover from its credit customers? Yes, that irrecoverable amount from the credit customer is termed as bad debt in the business. More or less, in each and every business, bad debt occurs where credit sales are made. Definitely, there is a risk of bad debt in any sort of business at the time of the credit sales. So, bad debt is purely a loss. It is purely a loss in the business. So, as it is a loss, it always has a debit balance. So, what is the accounting effect of the bad debt? As a result of the bad debt, the firm occur losses, and it reduces the amount of Sunday debtors, realized amount. Where it is shown? First, it will shown in the debit side of the PL account, while we will prepare the final account. Second, the amount of the bad debt is shown deducting in the balance sheet in the asset side from the Sunday debtors. That means the bad debt amount will be deducted from the Sunday debtors, then it will shown in the current asset heading in the asset side of the balance sheet. So what we have understood, the bad debt means purely a loss, and that arises only out of the credit sales and Sunday debtors. That is the main concept behind the bad debt.